Hey everybody, welcome back. It is Friday, January 23rd. I hope you had a good day of trading today. Let's get right into the news. So the markets closed today. We ended up extremely whipsaw type of up and down action for the week. We ended on a mixed note with the S&P 500 barely positive at 6,915, up just 0.03%. And the Nasdaq adding 0.28% to 23,501, and the Dow getting hammered for 285 points down, closing at 49,098. Intel's earnings disaster sent shockwaves through investor confidence heading into next week's monster Fed meeting and big tech earnings blitz. Intel absolutely cratered 13% today after reporting Q4 earnings that technically beat estimates, but they issued catastrophic Q1 guidance with revenue expected lower than the 12.55 billion street estimate. So the culprit, manufacturing yield issues on the 18A process node and supply constraints choking data center revenue despite sold out demand, proving Intel can't capitalize on the AI boom even when orders are pouring in. And that's been a real sticking point for a lot of these names, the AI names especially. The valuations have been so high, but the problem is people are saying, well, how are we actually going to make money? That's the thing that's been spooking people about a lot of these names. And so something like today, with Intel proving that they can't actually capitalize on the boom even when orders are pouring in. That's one of the reasons why the price cratered so hard. But chip stocks diverged sharply. NVIDIA did rally 1.5% and AMD surged 2.7% on reports that NVIDIA CEO Jensen Huang is planning a China visit in the coming days, potentially signaling Chinese officials may allow major tech firms to order NVIDIA's H200 AI chips. Goldman Sachs plunged nearly 4% to drag the Dow into the red, while the broader market showed signs of exhaustion after 2 days of relief rallies following Wednesday's tariff reversal. Economic data offered mixed signals. The Michigan consumer sentiment improved to 56.4 in January from December's 52.9 and beat the 54 estimate, showing that consumers are feeling slightly better despite ongoing price pressures. But S&P Global Flash PMI data pointed to worryingly subdued GDP growth of just 1.5% annualized for December and January, with new business growth across manufacturing and services hitting multi-month lows, raising red flags ahead of the Fed meeting. For the week, all three indexes posted losses, with the S&P 500 down 0.4%, the Nasdaq off 0.1%, and the Dow falling 0.5%, marking the second consecutive week of declines as Trump tariff volatility, Intel's manufacturing woes, and stretched valuations keep traders on edge. Now, before I wrap up the news, let me put up one real quick screenshot of the SPY today. And I'm doing this just to prove to you once again, as I keep saying, it is possible when you are a day trader to make money going either long or short. Now, I had a few trades today that I went long early this morning, and I made some money in the first hour of the day. You can see, obviously, the way that SPY popped early in the morning. But then if you waited and you saw a couple of things shaping up to the downside a little bit after that, you could have made a lot of money going short. I was already out of it myself by that point. But this is just to show you that when you are trading in conditions like this, you can make money going long or short. The only thing you don't want to do is just hold on to one thing all day long, thinking that you are going to just either rise all day or fall all day. You have to take advantage of the gains when you have the gains. That means getting in and out relatively quickly and taking advantage of all those big pops that go in your direction. I feel like a bit of a broken record, but it really is that simple. I mean, just be quick on your ins and outs, and just be able to, catch the moves when they happen and take advantage of the moves. So wrapping up today, next week we'll bring the critical FOMC decision on Wednesday. Plus, there's going to be a tsunami of mega cap earnings, including Microsoft, Meta, Tesla, and Apple, setting up a make or break moment for the 2026 rally, as markets will demand proof that AI spending is actually translating to bottom line growth. Will it happen? I have no idea, but I'm excited to see. So that's it for today. Once again, if you want to be in the 3-day options trading bootcamp next week, it's going to be Tuesday through Thursday. If you'd like to sign up, just go to my website, lonewolftradingclub.com. It'll be right there on the store page. You can sign up and get in on some 3-day options trading with me. So until Monday, hope everybody has a great weekend, and see you back here on Monday. Take care, everybody.